we are required to do the estate duty payable in Ahmed's estate and the apportionment thereof. Okay, so there's a lot going on there already. We need to do the calculation of the estate duty. Now keep in mind, there's a framework that you need to follow. Your estate duty, we need to work all the way down to the 20%. Okay, we need to get to the estate duty that is payable. And we need to get an apportionment. They're talking about the apportionment of the estate duty. So potentially here, there's a beneficiary that's going to have to pay some of the estate duty amount. We need to give reasons where we've excluded some assets or do not deduct certain expenses. Okay, so here we're looking at whether you are going to exclude something. Don't just give us a null figure or leave it out. We're looking for a reason. All right, so that's also important there. Okay, so let's start reading the question. Okay, Ahmed Reddy, the guy in question, he died on 1 January 2014 at the age of 70 years and 2 months. He is survived by his wife, Jessie, okay, how old she is, and the son, Ramir. And there's a grandson in the picture, Sammy. Okay, again, maybe you just want to quickly do yourself a little diagram. This tends to help. So we have Ahmed. He was married to Jessie. He is survived, okay, he's survived by Jessie, and then we have a son, Ramir, and then there's a grandson, Sammy. Okay. The executor finds the following assets in Ahmed's estate. Okay, we have a bank account, nothing weird there, that's going to be listed as an asset in the estate duty calc. We have life insurance, a policy for 3 million rand. And all the premiums amounting to 450 were paid by Ahmed himself. Okay, so on life insurance policies, you must just always be on the lookout. Does it meet one of the exemptions? This is a straightforward policy on the life of Ahmed. Doesn't meet any of the exemptions, like perhaps it was a key man policy or policy in terms of an anti-nuptial contract. And the premiums were paid by Ahmed himself. Okay, so we're not going to be deducting the premiums here either. Only if the beneficiary of the policy, so for instance, if this policy was paid out to somebody else and they were paying the premiums, could we then deduct the 450? But that's not the case here. So a straight 3 million is going to be included in our estate duty calc. Okay, so that amount there, that amount there. The next asset talks about a usufruct. Okay, so Ahmed has a usufruct over a house in Durban, okay, and then it goes on and on and on. So this is quite a lengthy paragraph. I'm not going to get into the detail right now, because at this point, I just want to see more or less what's going on in the question. If you start reading all of this here, you're going to get a little bit stressed, and it's a little bit too early to get stressed in this question. Okay, so we'll deal with the usufruct a little bit later. The motor vehicle, okay, there's a motor vehicle for 185, nothing weird there. We're just going to include that value in our estate duty. There are shares in an unlisted company valued at 650, and the executor sells them then for 635. Okay, so here we have to ensure that we're using the right value in the estate duty calculation. Okay, because they're unlisted shares, we have to use the valuation amount of these shares and not the selling price. Okay, so we will use the 650 in the estate duty calculation, and I've said estate duty calculation there, because the 635 we are going to use at the executor's remuneration calculation, all right, but I'll get into that a little bit later. A bachelor flat in London, so we have some foreign property here, okay. Now you must know that foreign property is included in your estate duty calculation, all right, so we're going to include 2.1 million in our estate duty calc. Again, estate duty calc. But when we do the executor's remuneration account, we're going to have to adjust for this because it's not an asset that we include in our liquidation account. All right, but I'm going to elaborate a bit later. The second point here, Ahmed and Jessie were married out of community of property, and the accrual system does not apply. Okay, so if we look at our little diagram, this is quite easy. Ahmed has his own estate, Jessie has her own estate. Right. There's not a joint estate, so we don't have to be dividing any of these figures. All right, Ahmed owns all of these assets. Ahmed's will stipulates that the flat in London and the motor vehicle must go to Jessie. and the rest of the estate to his son Ramir. Okay, so Ahmed's got a will. The flat in London and the motor vehicle will go to Jessie, the wife. Okay, little alarm bells. What should you be remembering here? Section 4Q, all right, is an allowable deduction. So if you think of your estate duty framework, you would have had you're going to list your assets at the top, you're going to deduct your liabilities, and you're going to get to a net amount. And then at that point you can say, okay, what allowable deductions can I get now in terms of the Estate Duty Act? Section 4Q is your amounts left to surviving spouses, all right, which will now be applicable. So there will be a deduction coming through in your estate duty calc for these assets, okay? Don't forget that. So let's write here, Section 4QNB. Okay. The next point, the executor paid the following expenses, all right, funeral expenses, that's just going to be straightforward. Our master's fees are 600 Rand. And the executor's remuneration, we know, is 3.5% on the value that you're going to, on the gross value of assets that you would use in your liquidation account. Okay, so there's potentially going to be some adjustments when we do the executor's remuneration calculation, all right, but we'll get to that. And then there's some death duties here that were paid in London, paid on the flat in London of 20,000 Rand. Okay, so what's happened here is Ahmed owns this property in London. The London authorities have taxed him over there, and he's paid 20,000 over there, and he's potentially going to have to pay estate duty in South Africa on that amount. Okay, so that's a little bit unfair because he's going to be paying tax twice on the same property. So potentially there's a rebate that we could get here once we've calculated our estate duty. Okay, so just keep that in mind, that potentially we have a rebate here that we must calculate. All right, so we've actually gone through all the info, so let's get going with the answer. Okay, so if you think of your framework, you're going to start off with your assets. Okay, maybe at this point, all right, what haven't we dealt with? We haven't dealt with the usufruct. Okay, so let's do that first. It's quite a difficult thing, a usufruct, to calculate, and it's got a lot of calculations, and it takes up a lot of space in a question paper. So let's maybe tackle the usufruct first, and then when we do our estate duty, it actually will be quite a straightforward calculation and not get too messy. Okay, so let's forget about that, and let's do the usufruct calculation first. Now let's read here. All right, there was a usufruct that Ahmed owns. Okay, it's important to determine all the parties here. So Ahmed owns the usufruct, or he's the holder of the usufruct. Ahmed inherited this usufruct when his father died, when Ahmed was 55 years old. Ahmed's son Ramir is the bare dominium holder. When Ahmed inherited the usufruct, the house was worth 950, but the value has now increased to 1.5 million. And Ahmed has paid 20,000 Rand estate duty on the usufruct already when the father passed away. Okay. So there, another little alarm bell must be going off. Potentially there's rapid rebate succession here that you need to calculate. Okay, that happens when a person inherits an asset and then they die within a short space of time from when inheriting that asset. Okay, and the period is stipulated as 10 years. Okay, so let's go and have a look. Ahmed has died at the age of 70. When he inherited this property, he was 55 years old. Okay, so more than 10 years have passed from when he first inherited it to now when he passes away. Okay, so the rapid rebate succession will not be applicable here and does not need to be calculated. Okay, so this little sentence becomes irrelevant, so we can cross it out. Okay, so let's go back to our little diagram. So the parties involved here are Ahmed. Ahmed is the usufruct holder. Ramir is the bare dominium holder. Okay. Ahmed got it from his father. At that time, it was worth 950, the property. It is now worth 1.5 million Rand. Okay. Any other important information that we need to determine here? Okay. What should you be thinking about when looking at usufructs? You must be on the lookout to see whether the proviso 1 or the proviso 2 are applicable. Okay, don't start calculating these if they're not applicable. You need to see whether they're applicable. Okay, a lot of students all of a sudden start doing these calcs and half the time they're not even applicable. Okay, proviso 1 was a bequest price paid by Ahmed when this whole structure was set up by the father. No. So proviso 1 is out. You don't need to do it. Proviso 2. Proviso 2 is applicable if the usufruct is left to the bedominium holder. Okay. Now, Ahmed was silent on who the usufruct was supposed to go to. He didn't leave it to anybody in his will. Okay. He didn't say so-and-so must get it or whatever. So the usufruct will go to the bedominium holder, who is Ramir in this case. So then your proviso 2 is applicable in this question, and then we have to calculate it. All right. But the first step is to just work out the usufruct normally. Okay, so let's have a look at that. We use the current market value of the property, which is currently 1.5 million. We multiply it by the annual value, which has been determined as 12%, okay, and that gives us 180,000 Rand. We then need to multiply it by the life expectancy factor of the beneficiary of the usufruct. Okay, so who is getting the usufruct? Okay, as I've previously said, it's now Ramir. Ramir is the one getting the usufruct, so we need to use his life expectancy factor. How is this determined? We have to use Ramir's age at his next birthday. Now, Ramir, all the ages were provided in this first paragraph. So Ramir's 45 and 3 months old when Ahmed dies. Okay, so Ramir is going to be 46 years old at his next birthday. So you use the life expectancy factor for a male of 46 years old, and you go and look at those index tables which are provided to you at the back of your exam question paper. So Ramir's factor is 7,81924. Okay, that's going to give us a value of 1.4 million Rand, roughly. Okay. So at this stage, we haven't even gotten into the second proviso. All we've done is worked out what is the value of the usufruct. Okay, so that's quite simple. Okay, 3 little steps. Now you must test the second proviso because we know it is applicable. The usufruct is going to the bedominium holder, Ramir. Okay. The second proviso states that the usufruct, this value over here that we've calculated, cannot be greater than the current market value less the bedominium value at creation. Okay, I'm going to write that out and I'm going to repeat that because it is a mouthful. This value cannot be greater than the current market value less the bedominium value at creation. In other words, when this whole structure was set up by Ahmed's father. Okay. We have this figure. This is the 1.5 million Rand. That is the current market value of this property. We do not have this figure. Okay, we do not know what the bedominium value was at the time of creation. This needs to be calculated. Okay, how do we calculate the bedominium value? Okay, now this property has kind of been split into 2. Okay, the property is equal to a usufruct portion and a bedominium portion. Okay, not every property has this structure, but because this Ahmed's father has set up this structure, this value, the property value, has been split into 2. Okay, we need to determine what this value is. Okay, and this simply becomes a maths equation. So we know what the current property value is, minus the usufruct value, is going to give us the bedominium amount at the time of creation, because that's the figure we're after. Okay, so this is what we're going to calculate right here. Okay, okay, I think I'm going to go on to the next page now. So, the current market value we know is 1.5 million, right? Now we're going to calculate the bedominium at the time of creation. Okay, this is done by calculating the usufruct at the time of creation. Okay, this is then simply applying your normal rules on how to calculate a usufruct. Again, what was the market value at the time of creation? It was given as 950. We multiply by the 12% annual value, or to get the annual value rather. Okay, and that figure is 114. Then, who was the beneficiary of the usufruct at that time? It was Ahmed. Okay, the father left the usufruct to Ahmed, so we use his life expectancy factor. He's the beneficiary. And at that time, how old was Ahmed? Ahmed was 55 years old when he inherited the usufruct. Okay, so you take the age at his next birthday. So he would have been 56 years old. So a factor for a 56-year-old male must be used, and that factor is 7,14414. And that gives us a value then of 814432. Okay, so at the time of creation, the usufruct value was 814,000 Rand roughly. Okay, we've calculated now the usufruct at creation. Remember, we're after the bare dominium at creation. So the bare dominium now will be the market value at that time, which was the 950, minus this figure here. All right, 814432. So the bare dominium value at creation is 135,000 Rand, roughly. Okay. So now that we have the bare dominium amount at creation, remember the second provisor says that this value here cannot be bigger than the current market value minus the bare dominium value at creation. Okay. So it will be the current market value of the 1.5 million minus the 135. And that gives us 1364432. Okay, you do have this answer in front of you, so you can follow it slightly better than how I'm doing it now. Okay, so remember what we said now. The market, the usufruct value that was calculated right in the beginning, this 1.4 million, all right, cannot be greater than the usufruct value that was calculated here. Okay, so you have to use the smaller amount. Okay, so what has happened is that the second provisor has actually led us now to use this figure as the usufruct value in our estate duty calculation, and not this figure here. Okay, so now that we've worked out our usufruct, let's start and do our estate duty calculation, which is what is required of us. All right, we list our assets. Okay, our first asset was the bank account, so we can just say bank account of 432. The policy, the insurance policy of 3 million. Remember, we're not doing anything with those premiums. We're not deducting any of that. The usufruct we have now worked out. Okay, so we've gone through all of this information, and our usufruct, remember, we have to use the lower amount now, the one that we've just calculated over here, this 1364 amount. Our next asset is the motor vehicle. Our motor vehicle was valued at 185. We have those unlisted shares that we've spoken about. We need to use the valuation amount in our estate duty calculation, and that is the 650. Okay, and then we have the foreign property. Is foreign property included in our estate duty calculation? Yes, you have to include foreign property. London flat. All right. And the, okay, we've included all our assets. Let's just make sure that everything is in there, and that adds up to 7,731,432. All right, we've done our assets. Now we must just deal with our liabilities quick. Liabilities in the question, what expenses, liabilities did we have? All right, we had some funeral costs. Of 8750. We know our master's fees are 600 Rand. We have to deal with our executor's remuneration. We know is at 3.5% of gross value. And I'm writing this out, so I'm going to explain it now. Gross value of assets per the liquidation account. Okay. It's not this figure that we can use, all right. A lot of students make that mistake by simply using this total over here. Okay, that is not the value of the assets per the liquidation account, because we have some items here that would have a different value in our liquidation account. And that specifically would be the unlisted shares. All right, the unlisted shares would be included in the liquidation account at their selling price. In the liquidation account, we do not include foreign property. And again, the usufruct would not be in our liquidation account. Okay, so this figure has to be adjusted. So you've got two ways of doing this figure, calculating this figure. Either you can say, I'm going to work through all the assets again and just include the ones that would be in the liquidation account at their respective values. Okay, so that's one way. So I'm going to say, right, in the executor's remuneration calc, in my liquidation account, I would have the bank account of 432. I would have the insurance policy. I would not have the usufruct. I would have the motor vehicle of 185. My shares would be at 635, the selling price, and not the valuation figure. And my foreign property would not be included. And that value is what would be included in my liquidation account. And 3.5% of that gives you 148,820 as the executor's remuneration amount. Alternatively, what you could do is use this figure and then make all the adjustments and then deduct the foreign property, deduct the usufruct value, and adjust for the difference in the unlisted shares value. And you would get to the same result. Okay, so that's the total of our liabilities, which would be 158,170. Okay. Our net amount now in the estate is 7.5 million. All right. Remember those little alarm bells? Let's not forget our section 4Q announcements, deductions. We can take the section 4Q allowance of items left to spouse, surviving spouse. Okay, so Jessie got a flat in London and the motor vehicle. All right, that totals up to the flat and the motor vehicle. That amounts to 2285123. Okay, that's as allowable deduction. We land up then with a net amount of 5.28 or so million. All right. Okay, so just think of the framework quickly. Did we deal with the assets? We've done the liabilities. We got to a net figure. We looked at any allowable deductions that we're allowed to get. Things left to a charitable organization could also have come in here or whatever, okay, but weren't obviously applicable in the question. So now finally we can use our 3.5 million Rand abatement. Okay, the estate is big enough to use the full 3.5 million, so let's take it into account. Right, and that leaves us then with just over 1788262. All right, we are then going to pay estate duty of 20% on this figure now. All right, so just say times 20%. Don't forget your rates. Don't mix up your rates with other tax rates, all right? Estate duty is 20%. And then our final figure for estate duty is 357,652. Okay, now don't get all excited and think you are finished with the question, quickly glance back at the required section. The required section, or required part, has said we need to deal with some kind of apportionment here. Okay. Now think back to who were the beneficiaries in their estate. Okay, Jessie is not really going to feature much because she doesn't receive a usufruct, an insurance policy, or an annuity. Okay, that's quite important to remember now. Beneficiaries who receive those kinds of assets are the ones that have to pay a portion of their estate duty. Okay, usufructs, anyone receiving a usufruct, an insurance policy, or an annuity will have to pay a portion of estate duty. So in this instance, it will be Ramir the son. Okay, he's the one getting the usufruct. So he's going to have to pay a portion of the estate duty. Okay. So we are not finished with the question. All right. So I'm going to write out the estate duty amount here again of 357,652. Okay, before we get to that, do you remember somewhere in the question we said potentially we could get a rebate on the death duties that were paid in London? Okay, because we might pay tax now twice on this foreign property. But that's not going to be the case. Why? All right, if you remember, the London flat was left to the spouse, okay, and we got a deduction. So even though it came into our calculation at the top, included in our assets, we were allowed to deduct it as an allowable deduction in terms of Section 4Q. So we never paid estate duty on the flat, in effect. Okay, so no estate duty was paid on that figure. All right, so there's no foreign rebate tax that we need to calculate. Okay, so luckily, that also then becomes irrelevant. All right. So the only thing we need to focus on now is the apportionment. And like we said, Ramir is going to pay some of the estate duty amount. So Ramir needs to pay a percentage of this figure that is attributable to the usufruct. Okay, and the usufruct figure, remember we calculated it up here as the 1.364 million. So you take that figure and you put it over the amount just before you use this 3.5 million rand. Okay, you're going to put it over this figure, and that's going to give you the percentage of the amount that Ramir needs to pay. All right, so the usufruct amount is the 1364432 over the 5288262 times that figure there, the estate duty amount. Okay. And that gives us 92,000 Rand, roughly, that Ramir needs to pay. Okay, who pays the balance? The balance is going to be paid by the estate, the executor. Okay, and the balance being 265,374. Okay, and that obviously will total up to the total estate duty that is payable in this estate. Okay, so that's question 2, an estate duty, and it was quite a nice question because it dealt with a whole framework, even the apportionment that can happen at the end, and it also touched on some rebates, which obviously will affect your estate duty calculation.